All right, everybody. So we want to start out by talking about the business owner's policy for this lecture. We'll get to farm insurance on the next lecture. The idea behind the business owner policy is that small business and even medium-sized business in certain categories, they really have some similar needs that are mostly uncomplicated. And so the idea is if the needs are pretty much the same, then it makes sense to have a standard policy that everybody's using because underwriting is expensive. And we're willing to go through individual underwriting and risk assessment for these giant businesses. But for small businesses where everything is pretty much the same, we don't really need to do that. And then on the bottom line, we're trying to be competitive with our pricing. And that's hard to do if you're going to individually underwrite. That takes some serious effort to do. So if you're not uncovering anything new or different that's going to allow you to charge a higher premium to more specialize, to create more specialized coverage to meet the needs of that business, you're probably better off just providing a standard product. And everybody's better off that way. And so this is how the business owner's policy, the BOP, got created. Now, these are not forms that are produced by an agency. Different companies are using their own policy forms here to handle small businesses. And okay, it was 1970s where they started to realize, you know what, a lot of these risks are pretty much the same. There's really no reason to have individual underwriting here. But because it developed through the individual insurance companies, each creating their own forms, it can sometimes be hard to compare across companies. And so that means if you're going to switch from one company to another, you probably do need the services of a broker to help you figure out what you're getting and what you're giving up. So again, small and medium-sized businesses in certain categories, mostly small businesses, and we're going to be able to handle that relatively with standardized needs. So it is a package policy. It's one policy and it's got all the coverages you need if you're a small business. They're going to be rated by class. So what type of business are you in? Are you a clothing retailer? All right, well, if you're a clothing retailer and you got less than 10,000 square feet, your risks are pretty similar. You got some property risks. You have the liability risks of owning a business. And we're not going to separately rate the liability. When you're talking about a retailer, it's pretty much premises liability that we worry about and maybe some product liability in certain types of retail, but not clothing, right? So we don't have to rate the liability piece of it separately. So we've got 4 different classes. We've got retail, we've got wholesale, we've got service businesses, right? Maybe you're a retail plumber, and primarily what you're doing is going out into people's houses and providing them some service work there. Well, that's a fairly common small type of business to own, and the risks can be standardized. We know what those risks are. Even there, it's not so much premises risk, property risk, and definitely not premises liability. There, you're looking more at operations liability, right? And then processing. Are you a manufacturer? Are you adding value to a product? And again, we're looking at under 25,000 square feet in these categories. Anything bigger than that, you're not really a small business anymore. Apartment buildings, that's fairly standardized. You've got a certain amount of units, and the exposures you have are related to the number of tenants you have and the number of units you have. Office buildings, you own office buildings and you rent it out. Exposures are kind of the same. Let me slide this down a little bit so you can see everything on here. Contractors, and we're going to put a limit on here. We're going to say anything bigger than 3 million in sales. You know, technically small business is anything under 5 million. And I know that sounds like a lot. But if you're going to have 100 employees, there's no way you're surviving on 5 million in sales. That's not going to be enough to generate to have 100 employees. It just isn't. So if you're talking about contractors with 3 million in sales, you know, maybe 500,000 in payroll, you think about that. Well, at the median income at, you know, call it 50,000, that's a little low. Median income in the U.S. is closer to 60,000. Call it 50,000, that's 10 employees. That's it. That's a small business. Pretty clear to see. So contractors, we've got some limits here. Restaurants, when we talk about restaurants in the business owner policy, it's only fast food. It's only places that have limited cooking facilities. The more cooking that's going on, the more likely it is you need to be separately underwritten and rated. because that's where the injuries come from, that's where the liability comes from, that's where the big claims come from. You think about the fast foods, there's limits in cooking there, right? Think about a Subway, right? I mean, there's hardly any cooking at all. What do you have, a toaster oven? You know, I guess you're baking bread, but other than that, there's no cooking equipment, and consequently, your liability risk, your work comp risk, that's pretty low. You start to get into places that have bigger kitchens. It's a much different risk, and then we can't use a business owner's policy anymore. We can't use a package policy, can't use a BOP. Have to separately underwrite and look at those things. So these are the types of businesses that are going to be eligible for this package. And basically, I want you to think of small businesses that there's many carbon copy of that type of business scattered throughout the country. That's where it makes sense. What's not eligible? Well, we already know auto business will not be. If you're a full-service restaurant or a bar needs dram shop insurance. I'm not sure if we talked about that in here, but you're serving alcohol, and that means that the person who consumes alcohol, if you serve them when they're intoxicated, you could be held liable for behavior that they have later on. As the person who served them alcohol, both as the person and as the business, that's a whole different deal. Now we're going to want to look at your training programs. And that requires some pretty serious additional underwriting here. So bars can't do a business owner policy, and a restaurant that's full service, not fast food, not limited cooking, can't do a business owner policy. If you're a manufacturer with more than 25,000 square feet, that's a big operation. When you think about an amusement park, that's going to be a lot bigger than that 25,000 square foot operation that we're talking about. So risks like that, that's not going to work. Financial institutions, they will have their own package policies that we can create for them, for financial institutions, but it's not going to be a BOP. It's not going to be this particular type of package. All right, what about the forms? What does that look like? Well, you're going to have some standard coverages that are automatically there, and then you're going to have options where you check a box and that's provided. So just like always, you'll have a declarations page that's going to outline what's covered. Here we only have two choices. Either you've got for your property, for your business personal property, you've either got named perils coverage or special form, open perils. Everything's covered unless it's excluded. We don't have a difference between the basic and broad here, right? So there you had, on the business property form, we had three choices. Here you've only got two. You can get business income coverage. And that's just an option. Yes or no, do you want that? Is it possible for your business to be shut down for a period of time where the lack of being able to use your physical space is going to cause you a loss? Some small businesses, it wouldn't. You think about somebody who's running a tax preparation service out of their home, right? Well, all right, the home gets destroyed, the office gets destroyed. That might create some problems, but in the meantime, you could probably still operate. Now, the business income exposure there is, do you have to rent a place? Is that worth it? That might be worth it by itself, considering business income. But it's also possible maybe to operate somewhere else. I suppose the reverse is a better example. You run a small tax prep service and your office is destroyed, and so you move everything to your home for a while and you can continue operating. If you could easily do that, you don't need business income coverage. And then mechanical breakdown. Remember, it's not so much about the machinery that breaks down. It's about the damage it can do when it breaks down. So again, the boiler explosion is what we're thinking about. Is that something that would cause a problem for your small business? If it would, you can add that as a coverage. We're going to package in liability. It's going to look a lot like the CGL. And then we're going to have conditions and endorsements just like we do in all insurance policies. So endorsements is really where we tailor coverage to your situation. But we're still not using individual underwriting to do that. We're still going to look at these ways to tweak coverage. Those are just tweaks where we're adding endorsements. Okay, let's talk about some of these differences here between the business owner's policy, this package policy, and the commercial property form. So the first thing, we already said this, there's two forms of perils coverage. It's just named perils coverage, so it's got to be on a list, or it's open perils coverage that we call the special form, right? Everything is covered unless it's excluded. You can choose that. You still have a choice, but you don't have three choices. We don't have the basic where it's a short list, the broad where we add a few extra perils, and then open perils from there. Replacement cost is normally how we're going to replace property here. So now we still have this limitation on replacement cost. Remember how that works. So if you want replacement cost coverage, you will get that, but you have to actually replace the property. In other words, they won't settle for cash at replacement cost value, if that makes sense. The way this always works when you have replacement cost coverage, you'll get it when you actually replace the equipment. In the meantime, you'll get actual cash value as a cash settlement. And if you go out and you actually replace the items, then you'll get the difference, the replacement cost. And that creates a crunch, a cash crunch, a financing crunch. And so that can be a frustration to deal with on the claim settlement side. But it is standard in the BOP that replacement cost is going to be how we handle that. Now, again, it's companies that are drawing this up. So it's not like the other coverages we talked about where you can say, well, here's the form, here's what the exclusions look like, here's what the conditions are word for word. That's exactly what this means. You can't say that here because different companies can have slightly different policies because they're the ones creating the policies here. But in general, replacement cost is the standard. Also, we're not going to have co-insurance. We're just going to have people insuring for limits, and then that's what they have. Is the limit. We're not going to worry about are you only partially insuring. Your limit is your limit, and that's it. We don't have as many exclusions most of the time because we don't need these exclusions because these types of businesses don't have the types of property that would be excluded. So, all right, think about something like a dock, right? Well, normally that's excluded in the commercial property form. But the types of businesses that have docks are the types of businesses that aren't going to qualify for a BOP, a business owner's policy anyway. So you don't need to have that as a category exclusion because it's not going to come up. So in general, that's why you have fewer exclusions on types of property that we don't cover, because if you have a lot of that type of property, you probably don't, a BOP doesn't really meet your needs anyway. So you're going to need specialized coverage. You're going to be designing your own forms. You're going to really need a broker. And that's one of the reasons that we see fewer exclusions in the BOP, because the types of businesses that would have these types of property are already, it's not meeting their needs anyway. They're not choosing this kind of policy. Seasonal increase provision. So a lot of businesses have fluctuating inventory, right, to reflect what's going on with the change in the seasons. You know, if I run a retail shop down in a tourist area in the South by a beach, well, yeah, I have to carry a lot more in the spring and in the summer than I do in the fall and in the winter. And there's a peak season endorsement that we can use in a commercial property form. And we talked about that. If you have a BOP, it automatically gives you an additional 25%. So it's limited. But you automatically are insured for up to 125% of your average inventory as long as you've been insuring 100% of your average inventory. Then you get that peak season endorsement, the equivalent of that, you get that automatically. And there's no co-insurance. We don't worry about co-insurance, which is kind of nice. Again, co-insurance is something that can really trip up a business owner that's not savvy to insurance and how it works, which in my opinion is most business owners are not experts in this kind of thing. And you ask them how a co-insurance provision works, they have no idea. In all the other insurance products we talked about with separate forms, there's almost always a co-insurance provision, right? And if you want to avoid the co-insurance provision, well, then you had to fill out a business income worksheet. Remember that? We don't have any of that with the BOP. And in fact, we've got business income automatically if you want it, or you can leave it unchecked and that'll reduce your premium a little bit. Business income and extra expense, the standard form includes that. Because we're standardizing, the types of endorsements you can get are going to be relatively limited, and that shouldn't be a surprise. That's kind of what I think you would ordinarily expect. So some of the endorsements that you might find are going to be, there's a chart here in the book, employee dishonesty. That's a good one. We talked about that one already. Outdoor signs, mechanical breakdown we talked about. Some of the crime coverages like money orders and counterfeit paper currency, to go along with employee dishonesty. Accounts receivable coverage, valuable papers and records. So there's a limited number of endorsements you can choose because the whole point was to simplify. If you need lots of these things that aren't provided here, then you probably aren't eligible for the BOP. You probably need a commercial property form. And again, that shouldn't really be a surprise. So small business is what we're targeting this business owner's policy towards. You don't, on the liability side, you're not going to have a lot of choices in your liability limits. So we used commercial property examples, the CGL policies. Generally, we use $2 million as a limit, but in reality, that's low, particularly if you're a big business. Small business, though, $2 million is probably going to be all you're going to be able to find. Sometimes you're going to be able to include professional liability. And a lot of professional liability is excluded from the CGL. Right? So you're a physician. Now we're talking about a level of liability that's extremely tricky, extremely difficult, needs to be separately rated based on the specialty and the types of patients you see and the types of procedures you do. We're not going to be able to fold that type of liability coverage into a BOP for sure, because we can't even fold that into a CGL. But some types of professional liability could be included, like if you were a tax prep person. It depends on the limit. So if we're talking about the kinds of liability that $2 million would probably cover, we can probably include that into the BOP. Auto, if you don't own any autos, we automatically provide hired and non-owned auto coverage. So if you don't have any autos of your own, you won't need, your auto liability is already covered under the BOP. And that's kind of nice. Again, we're going to see fewer liability options and endorsements. So things that are specialized are going to be difficult to come by here. So we're going to find out that the industry-specific standard endorsements, where those come from. Let me pull that up and make it a little bit bigger. So yeah, you don't have as many options as endorsements as you would in a normal CGL. And that's because this is targeted towards specific industries that are carbon copy, where we have millions, well, maybe not millions, certainly thousands of these businesses spread throughout the country. So limited cooking restaurants. Well, all right, we've got a whole bunch of different endorsements that we can add on to that. That's pretty easy. And maybe some company has decided we're going to specialize in the restaurant industry where there isn't a large scale amount of cooking. Okay, well, then that company has likely developed a whole bunch of endorsements that they can use in certain situations to make sure that they can use a BOP. Simplified, everything's simplified, premiums are cheaper. Again, that's the whole goal, helping small business. Small business is a huge deal in the economy. Don't forget, half of all the workers in the country, half of all the workers in America are employed by small businesses. So half of them are working for fairly large entities, and that's where you get all your CGL and all the big fancy types of policies. Half of them are being covered by these types of businesses that are small in nature, somewhere between 20 and 100 employees. And maybe even smaller than that, maybe as many as few as 4 or 5 employees. Those types of operations, their insurance needs are not going to be fancy. We're going to try to meet them with a BOP. Now, when you rate that, that means we're rating all the coverages. It's simplified again, so we're including everything. So we can't spend a whole lot of time rating property, rating liability, rating all the other different exposures that we normally would. In the commercial package policy, so you're a big business, business income is rated separately. Your CGL is rated separately. Auto is rated separately. Crime is rated separately. Not to mention the BPP, the business personal property itself. All of that is separately rated. And you're packaging those policies together, but that's a major effort. With the BOP, one rate, that's it. So we're looking at, the territory. We're looking at the claims experience in that territory. We're looking at your construction, particularly that's going to be your biggest property exposure is the building. So is the building made of wood? More likely to burn if it is, right? So we're looking at that. Then we look at fire protection because, again, fire is going to be one of our biggest risks. And then how are you using the building? And then again, we've got another element of fire protection. It's all about fire protection. We're going to get to loss control later on in this unit. And we'll talk about how important that is, because if you think about what is a business's number one exposure, well, the one that loses me sleep at night is my liability, because I can't predict that. But what's realistically likely to happen is a building getting destroyed with its contents being also destroyed. And the number one peril there is always going to be fire. So that's going to drive the rating in the BOP, because that's your biggest exposure. And again, these are simplified things. So you wouldn't expect some odd loss to arise out of the normal operations of business, because if you have that type of business, you're not eligible to use a BOP anyway. So I worry about liability. The insurance company, based on frequency, is worried about fire. And so that's why all the rating factors tend to be fire driven. It's kind of interesting there to see. Okay, that's enough about the BOP. We'll talk about the farm policy next. And this is a good place to stop, because we've got a decent break in the topics. So we'll go from there. Thanks a lot.